This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashurdiz. Thanks for joining us at XM.com. The talks about a ceasefire in Ukraine concluded without an agreement yesterday, and the bombardment of major cities unfortunately seems to have intensified. Russian authorities tried to fight the crippling economic sanctions by doubling interest rates to 20% and introducing capital controls, but the ruble still imploded, and every sign points to a bloodbath when Russian equities are allowed to trade again. That said, the mood in global markets has started to improve. The tech-loaded Nasdaq even managed to close higher yesterday, with a little help from sinking bond yields. Investors have concluded that even though the conflict in Ukraine will raise energy prices and perhaps inflation itself, that will not translate into more aggressive tightening by global central banks. Yields on government bonds in America and Europe have fallen considerably as rate hike bets were pared back, breathing life back into riskier plays like equities, especially in speculative growth stocks that got annihilated in recent months. With bond yields declining almost in lockstep across different regions, the effects in the FX arena have not been dramatic. Currency trading is a relative game after all, so if both European and American yields are falling at a similar pace, euro-dollar is unlikely to respond much. But there are exceptions. One example is the Japanese yen. The commodity-linked currencies are also showing strength. Economies like Australia and New Zealand depend on their raw material exports, so they stand to benefit when commodity prices boom, even though their currencies usually trade as proxies for risk sentiment. Meanwhile, the Reserve Bank of Australia revealed nothing new when it concluded its meeting earlier today. The Aussie fell initially in the absence of any tightening signals, but rebounded soon enough with commodity sentiment. The rest of the session includes inflation data out of Germany and the annual State of the Union address by the American president. He is expected to address the recent conflict in Ukraine, although any remarks on inflation and energy prices may be more relevant for markets. WTI crude oil is currently knocking on the door of the $100 per barrel region, and if it cracks above, there isn't much resistance standing in the way until $105. Fears of prolonged Russian sanctions are running the show right now, and unless OPEC throws the market a lifeline tomorrow or the Iran deal closes, it's difficult to envision a turnaround. This was today's Daily Market Comment. Thanks for joining us at XM.com.